Hello, my dear subscriber. So today I'll be bringing you the analysis for Amazon Shorts, and we will also go through some of the explanation, the fundamentals behind why this Amazon short is taken. So in the past 2 days, especially this week, we have seen quite a big dive in the S&P 500. As you guys know, I'm always being there for quite some time, as early as February, right? But as mentioned in a lot of my previous video, I don't really want to fight the big tech during the rally. And now what is going on with Amazon is that it seems like this rally has actually given us a very good shorting price, like on a silver platter. It's like they are telling you, oh, you want a short? Wait, don't short yet, don't short yet. The price very low. Let me push up the price for you to give you a better shopping price. And now we have an extremely good shopping trade setup for Amazon. So let's go through a few things, okay? Let's jump into Amazon. Let's look at a brief outline of this company itself before we dive into the details. So previously it break through the resistance here, and then now it kind of like broke through that level already. It even gapped down. So perhaps in the coming in the next coming weeks or what, it can kind of recover to retest this area and then dive further down. Okay, so don't be that guy that like today enter, then tomorrow rally a bit like scared already, like oh my god, like oh, the price going up. Please don't be that person, okay? So take care of your risk. It is not like you buy today, you expect tomorrow to go down, which sometimes if we are in luck, it can happen. But most of the time, we need to wait a while for our trades to take effect. Okay, so another few things that we can see from the past, what happened was during February earnings, right? The 2021 earnings, the Q4 and the final year earning, right? Initially, the stock dived. Before the earning, the stock actually dived. Okay, the stock actually dived about 10%. And when the earnings come out, it actually shoot up by 14%. So if we kind of like pretend that this didn't happen, right, then what we can sort of deduce is that the earning result actually didn't really have a very big impact. It just caused the stock to went up by 4.5%, 4.6%. But what you also need to know is that during that period, the S&P itself was in a broad market rally. So I believe that rally itself is not really due to the overall strength in the Amazon, specific to Amazon, but rather it is simply a broad market rally. So for a big counter like Amazon, right, you really need to take note of broad market rally. That is because Amazon is actually part of a lot of ETF, a lot of unit trusts, a lot of funds. So sometimes when all these institutional investors and fund manager, they want to buy this fund, right? Since Amazon is part of the fund, Amazon get buy up together with the rest of the fund also. So big company like Amazon, Apple, they tend to have that effect where they will just rally for no apparent reason, simply because the fund is being buy up for year-end dressing, quarter-end dressing, who knows, for whatever reason, but you just need to be aware of that, okay? So this rally, if you want to call this a rally, it was contributed by a big profit in Q4, which we will go through. But if you have been around in our webinar for quite some time, right? This topic we have talked about it before. Okay, we have talked about what was the factor that led to this big profit for Amazon. And it is a one-time profit. It is actually a one-time profit, and it's not sustainable. Okay. So after that, after the so-called earnings, everything good and nice, right? The price actually dropped back below to the previous low again. So once again, right, this is a broad market decline also. So when the funds are selling off, Amazon also sell off, and then we have another broad market rally. So the thing here is this earnings, right, it didn't really change a lot because now we are back at the same level. Okay, we are really back at the same level. So what I'm trying to say is that from the time that earning came out, all the good news or whatever, right? It kind of didn't really have a huge impact, lah. I mean, the price is just doing whatever it want to do rather than the movement is specific to Amazon earnings itself. And another new thing that came up between then and now is Amazon have announced they want to do a stock split. And if you look at the chart here, right, you can barely notice where the stock split news come in because the chart didn't really have a very big reaction to it. Compare that to Tesla, you can immediately tell where was the stock split news that came in because it was a gap up. But once again for Tesla, right, it's not really stock split, it is an intention to stock split, which is different from Amazon because Amazon is really saying that, okay, we are confirmed going to do a stock split, but I mean, you can see the madness. You can see the madness in the market, lah. Overall, what you have to know about stock split is that yes, from historical data, after stock split, things tend to rally, lah. But we also have to take note that during those period, right, market conditions are much better than what we are facing right now. So back then we don't have inflation, and we also do not have a aggressive hiking of interest rate that the Federal Reserve is planning, and they are also going to reduce all the stimulus and all the MBS purchase, the mortgage-based security purchase, all this stuff, right? There isn't any really support from the Federal Reserve anymore, lah. So we do have a different macro economy. So we have to take that in mind. And that is simply because stock split in itself, it doesn't change anything about the stock, that it doesn't change any fundamentals. It is still the same as it was before the stock split. Okay, so it's usually driven up by a lot of I would say euphoria that often have to do with the stage of the macro economy itself, where everything is all rosy, all nice, right? Then things are going to rally, lah. For example, when Tesla stock split in 2020, yes, it was mainly because of the stock split, but it was also because during this period we have obscene amount of stimulus money coming in from Federal Reserve, and when those monies are present, right, a lot of people are going to buy Tesla because, hey, stock split, and there is this huge presence of large amount of stimulus money, we can shoot up the price. So it has something to do with stock split. It is like a euphoria, but there are tailwind, there are a lot of support coming from the Federal Reserve, which is push up this whole thing, lah. But right now, you can see that even for Tesla, it kind of like somewhat muted already. The movement is somewhat muted already. And for Amazon, there isn't really any, I would say, movement that is specific to Amazon itself, lah. Okay, so you have to look at it from a very holistic perspective rather than just stock split, price go up, that view, lah. Next, let's look at Amazon company in general. So for income statement, right, you will realize that Amazon, the growth for 2021, the revenue growth for 2021 kind of like declined. Even though the revenue increased, right, you notice that it only grew by 21%. In 2020, it grew by 37%. Okay, so the growth kind of like stagnant. And on the net income side, you can see that the net income actually, the growth also declined, but you will realize that this decline is a lot worse. A lot worse than what it is, because if we look at the operating income, if we just look at the operating income, meaning these are all the usual things that Amazon is doing, like Amazon Prime, they are Whole Food, or the Amazon Web Service, their usual business. Like if you look at just that operating income, right, the income actually dived, the growth actually reduced to 9% for 2021, which is a huge decline in revenue growth. And this is very, very alarming, extremely alarming for a company like Amazon. And you will notice that there is a huge non-operating income that came up in 2021, which amount to 13 billion. So it's actually a lot. If you look at all the previous year, right, they don't really have any non-operating income. In 2020, they have 1.35 non-operating income. And then in 2021, they have 13.21 billion non-operating income, which is almost 50% of their operating income. So that is extremely unusual. You have this profit from somewhere that have nothing to do with whatever that your business is in, and it is probably a one-time thing, and you will see how this huge operating income actually improve their overall net income. Okay, and for those of you are aware, or those of all the smart aleck out there, okay lah, sorry lah, not smart aleck lah. Okay, for those loyal supporter of Nimbus Capital who have been around with us, you will know that this 13 billion of non-operating income for Amazon is actually from Rivian. So Amazon have huge stake in Rivian. And at the end of December, 31st December 2021, right? Rivian price was actually quite high. Let's look at Rivian price at the end of 2021. Okay, so end of 2021 December, Rivian price was at somewhere around 110 like that. Okay, or maybe here lah. Let's look at it. Okay, here 100 like that. Okay, let's say 100 lah. Okay, so at the end of December 2021, Rivian price was somewhere around 100, and Amazon actually got in at a very early stage of Rivian, even way before the IPO. So the price that they have, right, is like maybe way lower lah, maybe like 50, 60, who knows. I wasn't able to find it lah, but I'm not going to find it also. It's not really required for our analysis, but what you have to know is based on whatever price they have, they actually book a profit of 13 billion for their Rivian investment. Okay, for their Rivian investment, they actually book a profit of 13 billion. Why am I looking at Rivian? Sorry, let me go back to Amazon. Okay, so they book a profit of 13 billion for Rivian. And 13 billion is, if you look at the overall net income, right, is 33, and almost 30% of it is accounted to this Rivian position alone. Okay, so that was when the price was at, Rivian price was at 100. So you don't really need to care what price that they bought in for Rivian. What you need to know is at December, when Rivian was at $100, they booked 13.2 billion. But right now, Rivian price is 1/3 of what it was. It is somewhere around $40. At some point, it was like $33. Okay, so I believe Q1 already ended. Q1 for 2022 already ended. So I'm not sure where is Amazon cutoff date lah. Maybe if we kind of look at it, if we give them a benefit of doubt and we look at 31st March, right? It's somewhere around $50. So it kind of like, you might want to put on your so-called put on your tinfoil hat. Why is it that shortly before the Q1 ended, there is a huge rally? There is a huge rally here. There's actually a 13% rally in Rivian. When which date was it? This was actually 29 March. Let's look at Nicola. Okay, actually Nicola also have a big rally during that then, but it is kind of like very suspicious that just before the quarter ended, there is a sudden rally. Okay, there's a sudden rally in Rivian. Then once the quarter have ended, right, they don't really care about the price really. Like, are they trying to, like, someone trying to push this up? Is someone trying to push this price up so that they don't have to report a very big loss? They don't have to report a very big loss for Rivian, because initially they book a profit at 100, but now whatever that the profit they book, right, they need to impair it, and they don't want to impair it at like $45. Maybe they are just trying their luck to push to 50. So if let's say if on a conservative side, if Amazon have to impair the drop for Rivian at $50, then you can kind of like roughly, I mean, it may not be exact calculation. We don't really want to spend so much time to get all the exact number, but just by a rough calculation, what you will expect is maybe maybe for Q1 of 2022, you might see a loss of $5 billion that is contributed by Rivian price, the drop in Rivian price. So I'm not saying Amazon is going to make a loss of $5 billion in Q1, but let's say maybe they make $10 billion that quarter, but they probably have to minus off $5 billion due to Rivian, and then it will hurt their bottom line. Okay, so we can like do a rough gauge. We can do a rough gauge. If we look at the quarterly, right? If we look at the quarterly, we can see the amount of net income they earn per quarter. So Q4 they earn 14 billion. This is very obvious because that's where the Rivian came in. And most of the other quarters, right, you realize it's 5 billion, 6 billion, 7 billion, 8 billion, 7 billion, 3 billion. So if we kind of like minus 5 billion from all these numbers, right, there's only a couple that they actually make a profit. There's only a couple that they are positive. There will be some quarters such as Q3 or maybe even Q2, right? They will go to a very close to zero. Okay, so that is one possible, I would say, catalyst for Amazon not doing very well. But you can also expect Amazon to do some accounting magic where they are not going to impair the loss in Q1. They will probably impair the loss in December, like how they only book the Rivian profit in Q4. They didn't book it in the first 2 quarters. They only book it in Q4. So perhaps they will wait until the end of 2021. Then they will say, okay, Rivian actually make this amount of loss, and hope they are probably hoping during this period, maybe Rivian will recover or they will do some other, I don't know, do some other accounting magic. Okay, so that can happen. But what you also have to take note is that this information, right, it is not like a super secret information that only I know. It's like everyone knows. Everyone knows this. It's not like only elite secret trader knows. Okay, it's a very open information that anyone who spend a little bit of time, put in the effort, they can find out already. Okay, so investors are definitely aware of this, and even if they don't impair this loss on Rivian during the first quarter, right, most likely the market can, the stock itself can sell down also. So that's one thing to take note. And second thing, the operating margin. Okay, let's talk about operating margin. If you look at the operating margin, it is very thin. It's like 5%, 8%, 6%, 4%, and then we have 2.5. So let's look at annual, much more. Excuse me, still sneezing. So the margin is very thin, 5%, 6% like that is very, very thin. And of course, for 2021, the net margin, oh my God, whenever I make presentation, I'm sneezing. When you look at the net margin for 2021, it's 7%, it's 2% higher simply due to the Rivian gain. But if you look at the operating margin, it is much lesser, from 5.91 down to 5.31. So I would say that operating margin is a much better accurate number that you should look at. So as trader, investor, whatever, if you are trying to look at certain things, right, use your brain, use your head, use common sense. Don't go and ask stupid questions like, hey, we look at net margin or operating margin, which one to look at? There's no easy answer. There's no easy answer. Sometimes we can look at net margin because there tend to be a lot of, I would say, non-operating profit that tends to come in quite often, and we need to look at that non-operating profit also to see whether if this is something suspicious or if this is something that is small, something that it can be recurring in the future. So you need to think through. Okay, there's no shortcut. There's no shortcut magic number, magic ratio, magic software, magic scanner that is gonna make you become billionaire. Okay, so if you are looking for that secret sauce, sorry to spoil your dream, you won't be a profitable trader. You have to sit down and really put in the effort and use your head. Okay. So right here 5.9 to 5.31. So operating margin is a very very thin, Meaning if you think about stuff like inflation, higher oil and gas prices, because Amazon does a lot of delivery, and you have inflation. And the latest thing that happened to Amazon very recently only, there is a union success. Okay, so there is a union vote which goes into favor of the labor union, meaning all these workers who have been mistreated working in Amazon for a very, very long time, like they can't even go for a toilet break, they don't really have good benefits, the working environment is very hellish, like not good to work. They won the union vote, and most likely you have also seen this across other company also, like Starbucks, and you can see how Starbucks, due to this the union labor thingy, right, Starbucks actually cut off the share buyback. Because why do they cut off share buyback? Mainly because they probably need the money to improve the working condition and make sure that their workers they have proper medical benefit, they are properly compensated in terms of wage level. So same thing is going to happen to Amazon also with this union labor coming in, right? Most likely they need to spend a lot of money to improve the working condition and improve the wages improve the employee benefit, all this kind of thing. And imagine for company like Amazon and Starbucks, where the profit margin is already paper thin until like 5%, 6%, right? All this increase in cost, what do you think it is going to happen to the profit margin for Amazon? Obviously, it's going to decrease. So you can already see that from 5.91 in 2020, it decreased to 5.31. And most likely in 2022, that margin is going to decrease some more, and most likely it will affect their bottom line. Their net profit will be affected. Okay, so what I have done here is actually my homework, my fundamental homework. These are all the numbers that you can find from the internet. So some of them are direct copy and paste from TradingView here, but some of them you need to dig into the Amazon financial statement to dig a bit. So you will notice a few things which outside of the TradingView, right? There are other alarming things that you can find also. Number one, this is very simple. 2021 non-operating income increased to 13 billion from 2021.35 billion. So we went through already. Okay, so this non-operating income is by Rivian, and where does it come from? I answered already. It's by Rivian. And can it be repeated in 1Q 2022? Definitely cannot. In fact, they need to impair the loss. So it is also a question that when do they want to impair the loss? Are they gonna hold on to it and hope that Rivian eventually recover and then they impair the loss, or they want to cut early now and impair the loss now before Rivian become worse and worse and worse? So they, if you look at it, right, Amazon is also facing what we retail traders are facing: cut now or cut now and take the loss, or become a back holder. Okay, but of course, I mean, they are on a different level. They can actually hold for the next 20 years and don't cut this loss, and they can just hang on to it. And who knows? But I mean, just sharing, okay? Just sharing. But if they make the gain here, if they book the profit here, right, even if they didn't cut, they still have to report the decrease in profit anyway at the end of 2021. So it will still come out in their report, okay? But it probably won't come out in Q1, but it might come out in the Q4 earnings of 2022. Okay. So next, right, these revenue numbers are from TradingView, but if you search hard enough on the internet, I'm not gonna spoon feed you where to search. You can actually find revenue estimate. The revenue estimate for 2022, 2023, sometimes they can be given by Amazon themselves for year 2022 outlook, forward guidance, that kind of thing. Okay, and you can also find the EPS guidance. And what you will notice is that for 2022, the revenue is actually going down to 15% growth. So in 2021, revenue grew by 21% from 2020. And in 2022 is going down to 15% growth, which is a very sharp decline, extremely sharp decline. So let's look back at the income statement here. Okay, it's very simple. You can see that from 2019 to 2020, the revenue grew by 37%. So even through the COVID-19, right, revenue actually went up, and it went up by 37%. And from 2020 to 2021, the revenue went up, but the rate that it is going up, right, it declined. The growth declined to 21%. So that's about quite a big decline, which is why if you look at Amazon, right, for the whole of 2021, it's quite flat compared to companies like Apple or Tesla or Nvidia. Like if you look at the beginning of 2021 to end of 2021, right, it's essentially one flat line. Okay, there isn't really a lot of performance, which is I would say explained by this decline in the growth lah. So imagine in 2022 it's gonna decline some more down to 15%, and in 2023 they expect Amazon to be good growth again lah, where the growth increased back to 70%. So who knows? All these are future estimate. Okay, so the thing here is we are not using all these numbers to like predict the TP level or whatever. We are just using it in a very rough gauge to see, is it going up or is it going down? Is the growth going up or is the growth going down? So you don't have to really worry about, hey, number accurate or not, number can use or not, can trust or not. Doesn't matter if it's 541, 550, 521, whatever, but at least it will be somewhere around there and we can somewhat roughly gauge the decline. Okay, and next, EPS. EPS is earning per share. So this is where things are a little bit alarming. Okay, so in 2022, the EPS is at the estimated EPS. So you can see where this, you can go and find where this number comes from. Okay, is it coming from Amazon? Is it coming from Jim Cramer? Is it coming from myself? Go and find out where that number comes from. Okay, so for year 2022, the EPS estimate is 52.2, and it's very alarming because it's actually lower than 2021, and Amazon have never reported a EPS that is lower than the previous year. So let's look back at the earning per share for Amazon. Okay, so all the way from 2019, if you look at the raw number, it is going up. 1.25 in 2015, 4.90 in 2016, 6.15 2017, 20.15 2018, 22.99 in 2019, and even during COVID, they actually almost doubled their EPS to 41.83. And in 2021, the revenue kind of like stalled a bit, but the EPS still went up by 54%, mainly due to Rivian. Okay, so from the data that we have since 2015, even during the 2015, the stagflation, rising interest rate, in 2017, 2019, right, where interest rate is going up, everything all like it was a very bad period to trade also. You can see that Amazon was doing very, very well in terms of their growth. But when it comes to 2022, it seems like we are going to see an overall decline in EPS for the first time. And my guess is this decline, they have already priced in the Rivian loss. They have probably priced in the Rivian loss for this decline, and they are saying that, hey, like we are not gonna make, our profit is not gonna grow this year. So they are kind of like giving an early warning, and that decline, it will make the earning growth reduced by 20%, which is something that we have not seen before. Okay, So this is very important. Take note. So does this mean that it's pricing ready? Does it mean that it's pricing ready, cannot short ready, too late ready? I don't think so. I don't think so. Why? Because we have the price now is currently at 2021 level. 2021 level. Okay, we just went back to 2021 level, and I think this rally here, it was caused by a broad market rally where there's a lot of quarter end dressing. There's a lot of the quadruple witching where a lot of options get exercised. So there's a lot of factors in play that cause the entire market to grow up, which is totally divorced from any kind of fundamentals. So that's why I say the price going up here is the market actually giving you Amazon on a silver platter. So if let's say everything is still very bearish, like the price kind of like hover around here, right? Then maybe I may not look for a short ready. Maybe I can say that, oh, this drop already probably have price in now. But now that the price have rallied higher than the Q4 earning level, and it is back to 2021 level, right? I think that this rally is a broad market rally. It has nothing to do with the fundamentals of Amazon itself, and it is just fund managers, portfolio managers buying up all the ETF unit trusts to sort of like do a quarter end dressing to post a very good result for their funds, and then now the cracks are coming in. Okay, the cracks are coming in, and the trade setup. Finally, let's come to the trade setup. The entry that I initially want to do was 3200. Okay, 3200. Actually, my traders, my cost traders, they are already inside. I actually tell them that, hey, I have no time to make. I haven't made the video yet, but within the video, I'm gonna say enter at 3200. Okay, because yesterday afternoon the price haven't dropped yet. The price was still here. Okay, so I was telling them that if it break down below 3200, you guys can enter. Okay, so it break down already, so the entry kind of triggered already, but the price is still at 3175. It only went down by $25. So are you gonna be a crybaby like, oh, so you never tell us why never tell us, now price go down already, entry miss already, die lah, walao eh, pay the Patreon money but miss the entry? Are you gonna be that kind of crybaby? So the thing here is, if you short 4 shares of Amazon, which will probably cost you like, I don't know, 13K USD, which means your account probably is somewhere around 50K to 100K. So I shorted 4 lots, I shorted 4 shares, and I'm holding a 100K account. Okay, so if you shorted 4 shares at 3200, and the price now is at 3175, right? Meaning you are only missing out $100. You're only missing out $100. So are you gonna be a crybaby and come and make a lot of noise because you missed the entry by $25? No, okay, no. If that kind of thing makes you very like I don't want to enter already, like it means that there's something very, very fundamentally wrong with your trading mentality, your risk management. Most likely you are those kind that chase a big position, and this $25 can actually end up in a big profit, and that means you are playing way out of your risk already. Okay, so it doesn't, this is tiny amount, this is very tiny amount. I'm looking at a TP level of somewhere at 2008 or maybe even lower, who knows, but I'm looking at 2008. So that is like $300 to $400 down, and that $25 is not going to make or break the trade setup. You can actually adjust your lot sizing from 3 lots to 4 lots or whatever. Okay, so think through, don't anyhow. Okay, don't anyhow cry over things that you shouldn't be crying about. So the stop loss will be very simple. It will be at I don't really want to go so high, because somehow I believe that this is the top. And you also have to take note, the earning is coming out in 29 May, okay? Earning coming out in 28 April. So it's very, very soon. I don't think it will like go up and then come down. Maybe it can recover a bit to retest the gap and then come down, or it will just go down straight. Who knows? But I don't think it's gonna go beyond this lah. So I don't want such a wide stop loss also. Maybe here is fine. Maybe 3400 is fine. Let's check. 3400. Okay lah, 3450 lah. 3450 lah. Okay, 3440. Okay, I think this is fine. And we can have a TP level at maybe here 2800 like that. I think this is a very, very good trade. You can enter, you can wait for recover or whatever lah, whatever you want to do lah. Just work out, just do some due diligence and work out your lot sizing. Okay, so the entry will be somewhere around here. So I'm gonna post this as an official trade setup sometime in the evening. So I believe this is one of the more high conviction trade that I sort of discover, I would say. But no matter what, high conviction or whatever, right? Please keep to your risk management. Please make sure you don't risk more than you are able to risk. And I believe for majority of us, right, we can only shorts we can only play shorts on this we cannot play put options because the put option on this is like $100 plus, meaning one option contract is going to cost you like 13k 14k like that. I don't think anyone here have that kind of risk unless you have a $1 million portfolio. But on the other end, right, I also want to point out to all those folks with very low capital account. Let's say you are on a 10k account. If you are on a 10k account, right, even if you want to short one share of this, it is already 3k. It is like 30% of your entire portfolio. So you might want to skip it. Okay, if you have a very tiny account, this short is not for you. Do not FOMO. Do not like, oh no, I'm gonna miss this best shot of my lifetime. No, there are a lot of other things that you can go for. We still have the home builder sector. We still have the trucking sector, which is very low in share price that you can aim for. So sit down and think a bit. Do not see a trade setup and then immediately go and open your trading app and then start entering left and right. Think through a bit on how it fits into your portfolio, whether your risk is able to handle it, and then yada yada, all this stuff lah. Okay, think for yourself. BYODD. So hopefully this trade it can pans out in our direction. There's a lot of bearish stuff going on in the market and I think it is going to soon take effect. And of course hopefully don't need to mention, but obviously we are going to hold this trade through the earnings. Okay, we are confirmed guaranteed chop holding this trade through the earnings, but understand why we are holding through the earning, because we want to see whether are they going to impair the Rivian loss or not, or even if they doesn't impair, right, is the margin going to decrease due to all the labor union that is happening. We want to see all those, and all those will be reflected in the earnings, and it can cause the share to dive down lower. So definitely we are looking for that, but not everything is like close eye follow. Okay, not everything is close eyes or say like that, then and blindly follow. Don't be that person. Okay, what if the share price drops so low before the earnings, that drop so low, which is like very good for us before the earnings, and then when earning comes out, right, then it can be a situation where sell on rumor and then buy on actual news. So it can be that kind of situation. So if it falls so low to the point and that it hit our profit level way before the earning, right, then we can actually lock some profit, and then we see what we can do. We can still hold through the earning, but we lock some profit first, or we just simply take the profit and then don't care about the earnings. And if the earnings come out and if it rebound, then maybe we can add another short position. We see how. Okay, so everything is on a case-by-case basis, not formula, not secret from a software that gonna magically give you a TP level and a date. Don't have that mindset. Okay, if things are that simple, everyone will be a billionaire. If I have that kind of super secret software that can do that, right, your subscription fee will be $1,000 per month, not $20. Okay, so hopefully you guys not only manage to understand the trade setup, but also the fundamental and the ideas and the reason why this trade is taken, because these are the reasons that will probably give you the confidence lah. And it will give you a lot more confidence if you are the one that come up with all these ideas by yourself. So that's something that I want to point out. Also try to be more involved with the market, try to be a little bit more curious. So I can tell you how I came up with this, and it's very simple. Actually, it was way back in Rivian. When I wanted to short Rivian, I was doing some research, and then from that research I noticed that Amazon have position in Rivian, actually a very big position way before Rivian IPO. And then after that, during February, Amazon report come out, and then Amazon report shows that they have booked a very big profit in Q4 due to Rivian. So from that point already, right, I have mentally booked Amazon in my brain already. I don't have to like immediately go and short, simply because like back then I have not done any homework yet, so I don't want to just blindly short, and neither should you. If you are looking at my analysis and trade setup, right, you should do some homework on your end also, in terms of at least your portfolio management lah, and to see whether this particular trade is fit for your portfolio, rather than blindly shorting or blindly trading without any kind of due diligence on your part. Okay, so after I realized that, right, and after I noticed that Amazon rally until this point already, I was thinking to myself that, hey, maybe it is a good time to do some diligence on Amazon, and if this is a potential top, it can be a short. And what you will notice also is that this will be the first short that is based on a mega cap tech company that is very closely related to S&P movement. We don't really have such a short on our portfolio yet. We only have Starbucks that isn't really playing along with S&P. We also have the children place, also don't really go together with S&P. We also have home builder, which also don't really go together with S&P. But now we have the first big cap, mega cap counter that is closely related to S&P and Nasdaq that we are going for a short. So if in the next 1 week, 2 week, 3 week, or 1 month, S&P continue to dive, we have our Amazon as a market proxy. We don't need to short the market itself, but we have a company we have a trade that is representing the market. But that trade itself is also one of the weakest trade it is one of the weakest company that we pick out from the market. Because, for example, Amazon can be diving, but Tesla and Apple can be shooting up because they are bullish in some manner, but Amazon is kind of like lagging. We can have that scenario, and if that happen, right, S&P is gonna stay flat. And if you are an S&P trader, right, your position will be flat, but as an Amazon short, Amazon might be going down. Okay, so we can have those kind of situation also. So that's why I will not trade the market. Once in a while, I will do some short YOLO, but like it is only contributing to like 5-10% of my entire portfolio. Like the other 90% is always specific stock, specific position. Okay, guys, so that's the end of my Amazon presentation. Hopefully, you guys will be able to profit from this, and please take care of your risk. Please do some due diligence on your end also. Have a great day, guys.